Aotearoa, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. August the 1st is the new deadline for tariff negotiations with the US. It's an endlessly moving deadline, born out of frustration at being unable to make any meaningful deals. Locally, this week will feature our first peek at June inflation components, with the selected price data out due on Thursday. Maybe before that, we'll get the June REINZ data. In Australia, all eyes will be on their June labour market data due on Thursday too. And later today, we'll get China's June export and import data, to be followed later in the week by China's big monthly data dump, which will include their second quarter GDP result. It will be a surprise if they have to admit a variance from their official target of about 5.2%. In the US, it'll be all about tariff setting, interspersed with their June CPI data, also likely to match what their government wants, 2.5%. Canada will also release their June inflation result with a more credible process, and markets expect 3%. Japan chimes in with its version, expected to be 3.3%. In the background, there'll be the start of the second quarter earnings results from Wall Street majors, including some big banks. Over the weekend, Canada reported something of a surprise because their labour market strengthened in June. Not only did they generate 83,000 new jobs in the month when no gains were expected, their jobless rate dipped when it was expected to rise. Even though 70,000 of those new jobs were part-time, the 13,000 new full-time jobs was much better than the 1,000 full-time job losses expected. Even wages rose 3.2% from a year ago, although they did slip slightly from May and have remained flat since January. Given the forces being applied by their bully neighbour, it's hard to know whether this overall June result is an anomaly or an indication of resilience. Only time will tell. And Canada also released May building consent data over the weekend, and it was unusually strong, up at a 12% rate from April. From a year ago, June consent values were up 5.1% on an inflation-adjusted basis. By any standard, this is very good too. In the US, the level of tariff taxes being imposed on Americans is becoming clearer. The latest US government accounts show them hitting $27 billion in June, $113 billion for the 9 months to June. Tariffs are paid by the importer and become a cost that will be embedded into how those products are sold. Treasury officials anticipate further growth in tariffs collected, expecting them to reach $300 billion in the 2025 calendar year. Those added taxes allowed the US federal government to report a $27 billion surplus in June. In June 2024, they reported a $71 billion deficit. In the 12 months to June, they've accumulated $1.9 trillion in deficit, more than the $1.8 trillion for the whole 2024 fiscal year. The tariff boost for June got the benefit of some seasonal shifts, Treasury officials noted. Adjusting for those, June would have shown a $70 billion deficit instead of the $27 billion surplus actually reported, they said. The weekend brought new tariff threats to Mexico and the EU of 35%. They are moving to unilateral positions because they seem hopeless at negotiating, completely misunderstanding the process. Perhaps we should note that the US dollar has fallen 11% from the Trump 2 January inauguration to now. In the whole of the Trump 1 presidency, it fell a net 10%. So the decline in the value of the greenback is just getting started this time, it seems. Holding American assets by foreigners is going to involve sinking currency pressures, and it will become much more costly for American investors to buy foreign assets for the same reason. With fiscal management rife, it is hard to see this improving in the next few years. And some of that uncertainty is leaking into company balance sheets. Credit rating downgrades now exceed upgrades in the US-listed corporate scene. For the first time that has happened since 2021. Company cash balances are shrinking. Not fast yet, but it is a turn. More companies are losing investment-grade status. All this goes to the heart of company valuation levels. The forward 12-month PE ratio for Standard & Poor's 500 stocks is 22.3, far higher than historic benchmarks. And in Japan, we should keep an eye on parliamentary elections that will be held on Sunday, July the 20th for their upper house. Given the national government of Conservative Shigeru Ishiba relies on a tenuous coalition with a small religious party, this has become a referendum on Ishiba's stewardship. And China announced a 2% increase in their national state pension starting in January 2025, because when more than 6 months into the year, presumably back pay will be involved. This year's increase, the 21st in a row, comes as studies project that the system is on track to run out of money in about a decade. Until 2015, the annual increases were 10%, but have shrunk away sharply since the demographic forces have turned tougher. The US Treasury 10-year yield is now at 4.42%, unchanged from Saturday and up 10 basis points for the week. And the price of gold will start today at $3,355 an ounce, little change from Saturday, but up a net $18 for the week. American oil prices are still just over $68.50 a barrel, while the international Brent price is just on $70.50 a barrel. That's up a net $2 for the week. And the Kiwi dollar is now at 60.1 US cents, unchanged from Saturday, but down 0.5 cent from this time last week. Against the Aussie, we're up 10 basis points at 91.4 Australian cents. Against the euro, we're holding at 51.4 euro cents. That all means our trade-weighted index starts today at just on 67.6, but down 30 basis points for the week. And the Bitcoin price starts today at $118,763, and a new record high and up 1.1% from Saturday. Volatility over the past 24 hours has been modest, though, at just on plus or minus 0.9%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.